Good morning traders, welcome to Failure to Displace, and in this video we're going to take a look at EURUSD in this morning's London session where we had a textbook 3R trade using either our 5-minute OTE entry strategy or a 1-minute entry that I will go through as well, which is the entry I took at the start of the new 2 AM candle. Let's jump into the analysis now and see how we got this trade. So here we are on our 15-minute time frame, and as always we're going to be using our session liquidity tracker to keep an eye on what liquidity has been taken. So the liquidity tracker is showing us green lines for untapped liquidity levels, and the red lines show us when the liquidity has been taken. Links to all the indicators that I use are in the description below, so feel free to check those out. Coming into the new London session, we can see that we've just swept Asia low. Now I've checked Forex Factory, we've got no major red news this morning, so we've got all clear as far as trading goes. So I'm on the lookout now for a potential reversal of this, because put a new weekly low in and then potentially looking for a pullback. So see how price reacts at this level. The concern that I've got again is consolidation in the middle of price action, similar to yesterday where I wasn't really that keen on taking any trades. We've swept this low however, so potentially we can be looking for a long trade if that occurs. Let's drop to our lower time frame. So on the lower time frame, what's interesting me is this big drive down. So I like to see this kind of price action leading up to a reversal. This is like a big drive to take a lot of liquidity out of the market in a rush, stop people being able to exit their positions in profit, and then look for a reversal. So on the 5-minute, let us scroll forward. So London opens, we drive back down again. We have got a swing high here for our break of structure. No, apologies, this is our swing high. This is not classed as a swing high because this high and low were created on the same candle. So on the 5-minute time frame, I'm not going to be classing that as our break of structure because it's all in one candle. So we're identifying swing highs by having a candle to the left that's got a lower and a candle to the right lower, and the one in the middle is the higher one. So that is our swing high. Swing low has been broken, so this now does validate this swing high, because again, lower to the left, lower to the right, and we've got a new low in place here. So this is now our swing high. Left a fair value gap. So big bullish fair value gap which has been immediately bought back up. So this is the first sign to me that potentially we're getting a reversal on the cards. So this now is potentially an inverted fair value gap. So we expect price fair value gaps to hold price down. When they're cleared through, this means that that is no longer a strong resistance area, and it could effectively switch to a support area now. So it gives us the first indication that we may be having a reversal. Got a break of structure with a wick as well. The price has continued higher. Now we've got a break of structure with a body close. So at this point, using a 5-minute OTE entry. So again, I apologize if you get confused with the various strategies that I use. You need to have various weapons in your arsenal when you're attacking the market. I have the 5-minute OTE, I have the 2022 model as well that I look at depending on how the market's playing out. So for this one we can see we do have a 5-minute OTE, which means for a valid setup on this one we were looking at optimal trade entry down here. So to validate the OTE, what we need is we need a break of structure on the 5-minute with a candle body close, which is this one. We need a fair value gap that's being left within that break of structure leg, which we have here. This fair value gap just so happens to be a balanced price range as well, in all fairness, so that's an even more sensitive area. So to identify a balanced price range, we've got a bearish fair value gap followed by a bullish fair value gap. So this inefficiency where the two overlap, which I have marked as an inverted fair value gap at the moment, is actually a BPR now, balanced price range. Because there's just a lack of price action here taking place. So when price does come back and retest this area, you would expect some kind of reaction. Our optimal trade entry is the 618 Fibonacci. So when price pulls back to the 618, if you're trading the 5-minute OTE strategy, then this is your entry for a long position. Stop loss just below the low, just by a couple of points to give you some breathing space. And you're going to be looking for potentially a 3R. Now 3R here makes sense to me because what I'm seeing when I was looking at price action is this here, which is our potential resistance level, which is actually a breaker block. So on the 5-minute time frame, these consecutive down closed candles are actually a breaker block. Now, you would have expected this to act as support, so price would normally come down, come into this area, and then continue its move upwards, but this has been traded through, so this is a failed PD array. So therefore, because it's not acted as support, it could act as resistance now when we come back to test it again. So as price comes up there, we can expect some kind of reaction at this point. Our 3R falls below that, so that is a nice area to be looking at taking your profits and getting out. So I like the look of this. We can see if we scroll forward, price does come back, it taps our optimal trade entry, fills the balanced price range, and then eventually goes straight to target, bagging the 3R. So really clean 5-minute optimal trade entry trade. Now I didn't take this as an optimal trade entry because I wanted extra confirmation. I prefer to get entered at the start of 15-minute candles. But in all fairness, actually 145, that one was a 15-minute entry and then it pulled away. So 145, a new 15-minute candle opened, which is when we got triggered in. I was waiting for the 2 AM candle, basically. I just got to the computer screen at this point. Felt a little bit rushed jumping straight into the trade with my first analysis like that, so I wanted to just take my time and be patient. So I dropped onto the 1-minute time frame to look for extra confirmation. I'm going to show you my 1-minute analysis now. So we'll scroll back to here, which is where I was looking, where I came to the screen. So on the 1-minute time frame, again we have our inverted fair value gap, which has been closed through. We've left a big bullish fair value gap here. And we'll delete the fib for now. So this is where we'll pull in the fib from when we get this big retracement. So we've had our break of structure. We're pulling a fib from the high to the low. So we're aware now that we've got a valid 5-minute OTE entry at this point. As I mentioned, I didn't want to take this. I wanted extra confirmation that this optimal trade entry area was going to hold. So I waited patiently on the 1-minute time frame until 2 AM to get in. So on the 1 minute, we can see that this is holding now. So this fair value gap and inversion fair value gap, or balanced price range, where the two overlap, is holding. Got an order block just below us. Price has come back, respecting this fair value gap again. So we have cleared through it, coming back again. So we're sitting patiently, not getting drawn in here. This is where it is quite difficult, and all I had to do is convince myself that I was waiting till 2 AM, not expecting anything to happen until the new hourly candle opens. I didn't panic when this came up, I just waited patiently for some kind of confirmation. We'd left a fair value gap here, which is what I was monitoring. So this fair value gap here, so price has come up, it's now pulled back to optimal trade entry. It's respected the balanced price range, or it's cleared through it and then pulled straight back inside the balanced price range on this leg here, leaving a fair value gap, leaving a volume imbalance. So we've got a volume imbalance between this candle and this candle. So this void where there's no price action is a volume imbalance. Likewise, we have a volume imbalance on the bearish side as well. So I view volume imbalance is very, very similar to fair value gaps. So this little gap between the close of this candle and the open of this candle is a volume imbalance into a fair value gap as well. So I'm seeing indications that this is going to be a sensitive area. So I was waiting for the new 2 a.m. candle to open up. Price pulls up, pumps back. So at this point, I'm waiting now for a pullback for the 2 a.m. to get me into the trade. So this is 58, 59, and then at this point, I wanted an entry coming in from this fair value gap, optimal trade entry, to take this long. Stop loss was below this low again, so it's just exactly the same RR as the previous one. I'm targeting my 3R. So 2 a.m. candle opens. I entered this, so I didn't set a limit order. This was done manually. So as the candle came in and then started rejecting, that's when I took my entry. So I saw this confirmation. I saw that it opened, pulled down, and then started coming back again aggressively. So I entered then manually as this candle was rejecting off the optimal trade entry. And then this ran really, really quickly to target. So I was in the trade for approximately 10 minutes. 10 minutes for 3R. Again, observing the fact that we were respecting fair value gaps, leaving volume imbalances, coming into the new hour, and we had a valid 5-minute optimal trade entry anyway, dropping onto the 1 minute, waiting for some additional confirmation. So I hope you found that useful. That was the analysis for a nice 3R trade this morning at the beginning of the London session. If you enjoyed the video, found it useful, please leave it a thumbs up. If you have any questions or comments, leave them down below. And likewise, if you're enjoying this kind of analysis and want to see more videos like this, consider subscribing. We will be dropping videos daily now, moving into some proper price action, hopefully towards the end of the year. Thanks for watching, and I'll see you again in the next video.